Thank you. Patty, I think you almost put me in physical danger there by suggesting that I interrupt the flow of questions. But good afternoon, ladies and gentlemen. A huge thank you to our generous host, IVCA, for having us at this wonderful venue on the 15th anniversary of this flagship conclave. Personally, I don't think I could have picked a better week to be visiting India because after the World Cup win on Sunday, I feel like everyone I ran into was in a great mood. Now, my name is Kheg, and I lead the data partnerships and contribution strategy at Preqin. I think one of the speakers mentioned this morning, and I couldn't agree more, I feel that the theme of this year, vision to value, new era of Indian alternate capital, couldn't be more appropriate and timely. As the focus here is shifting from importing capital to building a sustainable, domestic-led investment ecosystem. And we're speaking today at a pivotal moment for the global private market, where capital is still abundant, but liquidity, exit, and value creation have fundamentally changed from the previous cycle. So for those who may not be familiar with Preqin, we are a part of BlackRock and a global data and analytics platform for the alternatives industry with over 20 years of experience in the market. LPs and GPs, such as some of those I've met, rely on Preqin's data to make informed decisions in how they raise capital, source deals, track and understand performance. If you're interested, the slides from this presentation, along with some of our recent reports, are available for download through the QR code shown on the slide here. And in partnership with IVCA, we recently released our latest performance benchmark, which is included in the content pack as well. Now, I know this is right after the sumptuous lunch we had, and there's going to be a lot of charts and data on the slide, so let me just frame the next 10 minutes quickly. We'll first take a look at a global view of where we think private capital is headed through the end of this decade. We'll then zoom in on APAC before focusing on India, and I'll be concluding with the key takeaways from the Indian benchmark report. So starting with the broad asset class performance, this is the Preqin series of indices tracking performance over the past 10 years. Now the clear takeaway is the private equity, indicated by the black line on the chart, has been leading the pack with about 14% annualized return over the past 10 years. So this has dropped, as we know, to about 7% in the past 3 years or so. Slower exits and higher interest rates mean gains are increasingly locked up within the portfolios. And value creation today is less driven by leverage and multiple expansion. Venture capital is on the pink line, and it's made some recovery since in 2025, so it's not yet returned to the level that we saw in 21 and 22. Private credit is in the blue line. I think private credit stands out in its consistency, maintaining around 8 to 9% return throughout these past 10 years, even outperforming PE in some periods. As we look ahead to the end of the decade, despite cyclical headwinds, at Preqin we remain constructive on the industry's long-term growth with a forecast of 9.4% average growth in AUM, taking the global private capital beyond 32 trillion by 2030. Now, underpinning this forecast, we expect a new fundraising cycle to emerge from 2027 onwards. Of course, the pace and strength of this will depend on the push and pull factors, of several factors which will drive the change in the size in the industry, from exit environment to interest rate paths to the continued expansion of access to private markets in the wealth space, as we see is gaining traction in the US. Driven by strong AI demand, we expect private credit and infrastructure in particular to play a key supportive role in this recovery. Now, against this backdrop, investor sentiment is shifting. In our latest investor survey, where we had over 200 respondents, LPs indicated plans to increase allocation not only in private equity, but meaningfully in infrastructure as well, as its assets are perceived as both return generative and also defensive in an unstable global rate environment. On the heels of recent headlines surrounding private credit, recently, I think LPs have also moderated their expectations, with over 30% expecting the asset class to underperform previous periods. That said, when we ask investors what's top of mind for them, the main concerns remain exit conditions and interest rate, reinforcing why liquidity management, secondaries, and flexible exit routes are increasingly central to investor portfolio construction. Now, turning to APAC, there's no denying that fundraising across the region has been challenging. The aggregate amount of capital raised in 2025 was just slightly over 10% of the amount achieved in 21, marking a new 5-year low. And this reflects persistent geopolitical uncertainty and macro volatility, prompting LPs to take a more cautious stance. In this regard, I know it's hard to see, but the shade in purple is India, and India is slightly less impacted given its strength in domestic fundraising. On the other hand, when we look at deal flows in both private equity and venture capital, they've been more resilient. Globally, since 23, the total value of PE deals experienced year-on-year growth. And the chart on the right shows the APAC region, and that indicates that deal activity actually picked up despite slower fundraising. So this indicates capital continues to be deployed selectively. And as we look under the hood at these deals, we found that increasingly they tend to be domestically driven, and this is especially true in India, in the green line. During periods of heightened trade policy risk, deals driven by domestic investors certainly provide a degree of insulation. The chart on the right shows transactions by sector, and they appear well diversified, with a slight larger exposure in IT, consumer, discretionary, and industrials. On the exit front, globally in the APAC trends, they remain broadly flat since 22, and I think this subdued exit environment tracks the concern highlighted in the investor survey results that was flashed earlier. It shouldn't be a surprise to anyone that the VC deal market has been buzzing with activity, especially around AI transactions in the North American market. Right, so we're here in India, and India continues to stand out in many ways, which create a favorable environment for long-term investments. Scale and economic activity and stability means a large amount of capital can be deployed effectively with potential for strong returns. A stable government and consistent policy framework as well have also further strengthened India's appeal to global LPs. The AUM for India has grown at an impressive pace. If we look at the data back 15 years, we'll see that private capital asset under management has more than tripled, reaching a record of $148 billion in mid-25. Private equity, venture, and private debt make up the bulk of this. So we'll look at these three in turn very quickly. For private equity, as mentioned, India-focused fundraising bucked the regional trends. In PE, capital raised in 25 approached the 5-year high mark. At the same time, the chart on the right shows deal activity declined by about 20%, reflecting global headwinds and valuation discipline, as we've seen in other regions as well. This chart shows exits, and they have also moderated. Now you notice that IPO was previously one of the favored routes under strong public market conditions. Their share has declined, and we see that secondary buyouts have increased in prominence. On venture capital, India is well known for the strong VC landscape. India-focused VC funds AUM has grown by almost 8-fold. If you look back to 2010 to now at $56 billion, venture capital now accounts for 38% of the total AUM of private capital. It was just 14% back in 2010. At the same time, the market is clearly maturing. The chart on the right shows the deal volume falling from over 2,000 deals in 21 to stabilize at about 1,200 in the last 3 years. And the aggregate deal value fell from 40 billion to about 13 billion. Now this shows investors are now more selective, they're prioritizing quality, capital efficiency, and clearer paths to exit. The exit market for venture has held up relatively well, especially in the context of weak global exit environment. While the number of exits moderated since the peak of 22, the line shows you the exit value remained stable relatively at about $3 to $5 billion annually from 22 through 25, even as other markets in APAC experienced much sharper decline. Finally, turning to private debt. Private debt has been the fastest growing asset class in India, and it's increasingly becoming a structural one by design. AUM grew astoundingly at about 10x, reaching 18.6 billion in 25, far outpacing other asset classes. Here you see that the number of India-focused private debt funds closed may have slowed since 22, but if you look at the number of total funds in the market, they continue to grow. And I think that indicates a strong and sustained market interest. Okay, with 3 minutes to go, I'll now turn to the IVCA Preqin benchmark report, utilizing data directly reported by GPs to Preqin across 748 schemes of AIF categories 1, 2, and 3, with performance data as of March 31st, 2025. On the chart, from 2021 onwards, you see a clear scaling of the market. Both investment and exit activities accelerated, reflecting a more liquid and mature ecosystem. Distributions of nearly $8 billion demonstrates India private markets are not only effective at deploying capital, but also returning capital to investors at scale. Across asset classes, PE offers a solid return of about 10%, while private credit, which is the dark circle on the chart, provides comparable return with lower volatility. And as expected, the sphere on the extreme right is venture capital that delivers expected return of nearly 14% net IRR, but with greater dispersion. So this wraps up my presentation. So to conclude, going back to the theme of the conclave, India has indeed entered a new era, one defined by scale and maturity. And once again, all insights provided on these slides came from Preqin Pro data. If you're interested to see more, please stop by our booth right outside, and you may get a copy of the presentation and data pack by sliding this QR code. So thank you for your time, and I hope you enjoy the rest of the conference.